You can say you'll pay off everything. You can say you'll get serious from the next month. But banks don't lend based on who you say you are. Banks lend based on who your habits show you are. And your habits are leaving a trail every single month. Here's how it really works. Every time you use credit, carry a balance, get close to your credit limit, that generates data. And data forms patterns. Banks don't see or ask for your intentions. They see consistency. Nobody is really asking whether you're trying. What they do ask is, what does this person usually do? In lending, past is not just a past. It is a forecast. And patterns are the most reliable way of predicting what is going to happen in the future. Think about what your financial behavior actually signals. Using most of your credit limits, you might be stretched. Carrying balances month to month, you might be dependent on credit. Individually, those things are not drastic, but repeated over time, they do create a pattern. For you, that pattern is invisible, but for the bank, that is everything because the pattern reduces uncertainty. Let's say you're somebody who is never over the limit and never misses the due date. But at the same time, your balance is constantly close to the credit limit and you rely on credit to smooth things out. Maybe from your perspective that sounds reasonable, but from the system's perspective, that looks like you're constantly under pressure, and pressure is risk. Now compare it to somebody else who keeps their balances low, doesn't rely on credit to go through the month, and has space between their income and their necessities and expenses. Both may look similar in the sense of being on time and not missing the due date, but they're drastically different because one operates from necessity and the other one operates from control. And banks can tell the difference. And they manage the risk accordingly through approvals, credit limits, and interest rates. Behind the scenes, it's actually very simple. Banks run a simulation. If we extend more credit, what is most likely going to happen? Not the best case scenario, not what you hope will happen, but most likely scenario. And that prediction is based completely on your patterns. If you show volatility, if you show large credit usage, that is going to be your predicted future. Because banks don't trust the intention. They make their decision based on repetition. And that's where it gets uncomfortable, because it's not that most people are irresponsible or reckless. They're just caught in a pattern that they haven't been able to fully step back out of to see it. Small decisions repeated become a cycle. Cycles repeated become an identity. And that identity, over time, starts to feel normal, even if it works against you. But here's what rewrites everything. You don't need to impress a bank. You just need to change your pattern a little bit. You don't need to change everything all at once. Try to make a small change. Reduce your credit usage a little bit. Try to have a little bit of an increase of space between your income and your spendings. And most importantly, stay consistent with it, because it is consistency that rewrites your profile, not intensity. Most people try to fix their finances with one big decision, but banks don't reward a single time action. They reward stable, repeated actions over time. So instead of asking yourself, how do I fix this quickly? Try to reframe it and ask, what pattern did I create and normalize? In the end, whether you realize it or not, you're always training the system to evaluate you. And over time, the system reflects your habits right back at you, in your limits, in your approvals, and essentially in your opportunities. So if you want to have a different outcome, don't focus on making a promise. Focus on becoming predictable in the right direction.